first chart is just a broad look at the overall size of the high yield market as defined by the amount outstanding in the high yield index. And just an FYI, I'm going to be going back to 2008 on these charts since that's as far back as market access data will allow us. But as you can see, we've grown a little bit more than 2 times. We went from 650 billion roughly in 2008 to 1.5 trillion as of late right now. On the other hand, high yield trading volume is up more than 4 times. So this chart here shows the quarterly high yield volume, but equating that to an average daily volume, we went from an ADV of 3 billion in high yield in 2008 to nearly 13 billion in Q1 of this year. And actually, if you look back the past 12 months trailing, we're at 12.3 billion ADV, just a monstrous number. Next, we'll look at the growth in terms of trade count, i.e. the number of tickets being printed. So that's up closer to 5 times since 2008. I know the slide says 4 times, but again, this is quarterly. If we equate it to daily terms, we went from less than 4,000 high yield tickets a day in 2008 to nearly 19,000 in the first quarter of this year. So the size of the high yield market is up a little more than 2 times. Volume and trade count are up 4 times, which tells you the real story here is not about the growth of the overall high yield market. It's about the market turnover, which is really being driven by the electronification of the corporate bond market.